Good morning, everyone, and welcome to the Quantum Leap Morning Leap for Tuesday, August the 7th, 2015. My name is Doug McKay. I'm the founder of Quantum Leap. Quantum Leap is a group of retail traders. We've been around for about 6 years in one form or another. Each morning we come together in a live broadcast to take a look at the market. We, start with a basic routine of a macro to a micro view, and then we drill down to the structure of the market, our trade levels, our targets, and our hypothesis. If you're interested in finding out more about our trade room, please contact me at quantumleaptrading@gmail.com or give me a call at 647-545-8065. We do not have a website. This is a retail trade group. It's not a commercial venture. Okay, so before we get going, let me get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of business trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in here are for education purposes only. Please trade your own plan and your own risk metrics. Okay, so let's just start with the news. News was fairly good out this morning. We had the prelim unit labor costs expected 0.0, came out 0.5. Last was 6.7, and then the prelim non-farm productivity was expected at 1.6, came out at 1.3, versus the last that came out at minus 3.1. At 9:30 we have Great Britain CB leading index, and then 10 o'clock we have wholesale inventories month over month expected to be 0.4. Last was 0.8. So not a real big heavy news day. The big news, of course, is going to be the fact that we've basically taken back all of our gains yesterday. Yesterday we went through last week's whole value area and tested that 2100. We were expecting a target of 2101.75 above that 2100 centennial number. We didn't quite get there. We got to 2100.75, but then we did go and test that 2101.75 in the Globex just after. But since then, we've been selling off and come down almost to the low at, with the low at 2083.25. Our 20-day ATR target is running at 19.43. Based on the current highs and lows of the Globex, our upside ATR target based on the low at 2083.25. Of course, that could be challenged with another, say, 40 minutes to go before the open. Our target is 2102.50 to the upside for the ATR target. And then the downside target is 2082.25. We're almost got down there. We got to within 4 ticks of that number. So we've expansed the whole range already in the Globex and have had a I think it was about an 18-point range so far in the Globex. But before we get going and taking a look at the hypotheses and our trade levels and the targets, I always like to start with a basic monthly chart, working my way down into the intraday and just basically taking a look at where we are within the trends of those time frames. I use a candlestick chart with a 9 EMA and a 20 SMA, very basic, just looking for slope and separation and where the different trends in the different timelines, time frames have been violated or remain intact. You can see that the overall monthly trend is very much to the upside still. We don't even get close to violating this trend until we get down into the 1900s. Great slope, great separation, trading near the all-time highs up at the 2134. So the trend is intact on the monthly. On the weekly, we've come into some consolidation. We're getting a symmetrical triangle here on the weekly. You might want to draw that out and wait to see which way they break. There is a possible head and shoulder pattern that the neckline will be somewhere down here in around the 2040 area, 2039 area. So keep an eye on that. Here's the left shoulder, here's the head, here's the right shoulder so far. Pattern's not completed yet, but definitely no true trend in the weekly. We are in sideways consolidation, but we are trading below the 9 and the 20 right now. On the daily gives you basically similar information. We're in consolidation mode, and we're just, yesterday we were trading before yesterday, coming down and being below the 9 and the 20. Then we popped back up, and then of course now we've given all of that, basically up again and trading back below the 9 and the 20, but sideways consolidation. In the intraday, in the intraday, we had moved up, and we had yesterday got back above the 9 and the 20. We had the start of a downtrend, and we were starting an upward trend, but we had that naked cross that happened yesterday midday, and that's at 2084. And we've come back and taken out that naked cross, and basically testing the trend to the downside right now. So no real trend on the 4-hour. On the 30-minute, you can see that overnight this has created a start of a fairly strong trend. We've tested the 20 several times, but failed every time to get back above it, and now we're below the 9 and the 20, and we're getting slope and separation to the downside. There is a naked cross down here on the 30-minute at 2070.50, so mark that down as a possible destination if we see continued weakness and we get below that key level at 2079 and a quarter. Going to the 5-minute, you can see that again. 5-minute also gives us a trend. We had created a naked cross, but we came right back up and took out that naked cross. And you can see that all these naked crosses have been taken care of. So I have one on the 15-minute at 2066. I have one on the 30-minute at 2070.50. And then also on the 30-minute above is 2099. I don't think we're done with the levels above, but I think we are going to see some continued weakness this morning, especially if we cannot hold that first level, which will be the 82 and a quarter. That puts us below a CLVN and a key level, but it also is going to be below the 20-day ATR target to the downside, and therefore we could get some expansion. But the 5-minute does have the start of a trend, and we have to look at further possible weakness. So let's take a look at the big picture. We're sitting smack dab in the middle of this microcomposite that runs from February the 5th through till today, and our value area high is 2107. Our value area low is 2060.50. On the smaller time frame, our most traded price going back to February is 93.50. The July 1st till now is up at 96.50. And that coincides with this smaller microcomposite that I'm watching now from July 22nd till now. And we've got this huge gap right here that we're coming back in and testing. And you can see that we've got this 82.75 level that we've held so far to in the Globex. And that is our ATR target to the downside. If we break that, I think we're going to see a test to this key level right here, which is the 79.75 and 79.50. The 79.50 is the value area low of this smaller microcomposite, this area that we're in balance. And if we get below that, then I think we're going to come down and test this gap area and come down and possibly close this gap and get into this triple distribution area between that 75.50, 71, and 66.75. Remember, we've got some unfinished business down here. If we can hold the 79.75, then I think we might get a rotation back up through into the towards this 87.50. Again. But again, this key area right here, we could be chopping around here coming into the RTH open, and then below the 79.50, I would think we'd have to come down a little bit further to pick up buyers with any conviction. Of course, the real key line in the sand for lower price discovery is the longer term microcomposite value area low at 2060.50. I'm actually using the CLVN of 59. Below 59, I'm looking for a bigger move down towards this 2050 area, but possibly seeing much bigger retrace down into this 2011-25, which is the VPOC of the longer term balance that we broke out of on that beginning of February. So that's what we're looking at in the big picture. It seems to be the same thing. We talk about this 82, 25, and 79, 75 becoming a very, very important level. You can see that the microcomposite LVN is just in the middle of that at 81 for this July 1st till now microcomposite. So let's take a look at the overnight and start moving our numbers over. See, we're getting continued weakness. We've broken the 82.75, now coming down to that CHVN at 81.50. So the overnight high, 2101.75. The overnight VPOC I don't think is going to change. It's down here at 2090.50. And the overnight low, we have to see how low we go. I think they're going to come down and test this 2079. So I'm just going to hold off on that right now and deal. Let's see what we get with the half-hour flip coming up here. But in terms of the upper levels above us, I mean, as it stands right now, we are likely to open up outside of range and outside of value to the downside. Yesterday, we opened up out of range and out of value to the upside around Friday. So basically, we're going to get into Friday's range if we get below 76.75. So, if we do break that 79, use Friday as your guide to the downside right now. But to the upside, the one area, the trade area I'm going to be looking at, of course, is the 82.25. If we get above 82.25, I'm looking for a rotation up into that range low from yesterday at 86. The first target above, though, is going to be this 84.75. And then a move, possible continuation up into this 2086. You've got yesterday's open, RTH open at 86.25, and the range low at 86. We had a open auction out of range, but really I think it was more of an open drive yesterday, and we had a trend day, a slow grind trend day all the way up into testing that 2100. If we get inside of yesterday's range, then I would expect that your main target above is going to be this 87.50. Now remember, 87.50 was the most traded price on the longer term microcomposite ranging from February till now. And if we get up here, you'll want to watch to see if this microcomposite VPOC shifts down to the 87.50. So 87.50 is going to be your first target inside of yesterday's range. And then there's the 89.50, which is the key level between the two undetermined fair values, or the two CHVNs at 87.50 and 93.75. 93.50 is actually the new microcomposite VPOC. So I'd be looking for that 89.50 as possible responsive selling to keep us in this lower distribution and come back down towards the 87.50 and the range low at 86. Above the 89.50, well, that's clear. The target is going to be, and it's going to be a target and a trade area, is this 93 area. You've got the value area low, you've got the midpoint, you've got the microcomposite VPOC at 93.50. So you got everything right there. And you really want to wait until we're above that 93.50. And then just above that, you've got a CLVN at 94.75 and an LVN at 94.75. So that's going to be a target and a trade area you want to get in if you're going to add on to this trade and get funded before then. And then anything above that, I'm looking for a move up into the 98 with your first target at 96.50. 96.50 is the most traded price from July 1st, as well as the microcomposite VPOC for the 722 till now. So that 96.50 is going to be the target just inside there. And then, of course, continuation will take us up to the 98 and possibly test the value area high and take out the naked close, which were right there at the 99.75. I'm sorry, at the 99.75 and the 2100 level. So that will be another key level. And then above that, I'd be targeting the overnight high. I don't think the RTH high is going to mean much to us once we get back into this 2100. I'd be looking for a move to the 21.0175, then 0375, then 0550. These numbers just should be ingrained in your head now, with the key line in the sand above shifted down slightly to 2107. And then 0875, and then the 2112. Very, very, very clear levels. And look at, we just put in a new low at 80.50, just in front of that 79.75. And that's going to change our ATR target to the upside. Just slightly down from the 2102.50 down to the 2090. Well, actually, it's 2099.93, so I would say 2100. But again, I don't think we're going to get back to that 2100 today. I think if anything, we're going to get a neutral day today, and we're going to get stuck in this area right here, and we could test from 75.50 to the downside, possibly 71, take out that naked cross at 70, and just chop around in this area, maybe come back up, get above 82, and come as high as maybe 87.50 to 93. I don't think we're going to be getting any type of a trend day today. I think we're going to get stuck in this low volume area as we mature the auction right here. So I'll put in the low. We could even go lower, but right now we've got the 80.50. Below it, we've got a naked close at 79.50, and then my trade area is going to be right there as well, below that 79.75. I don't know how this shifted. This should be up here. Actually, that 79 level has just shifted too. So it's actually going to be the 80.50. So our overnight low is going to be a key trade area. I'd say from 80.50 down to 79.50. Don't add on to this trade till we get below the 79. And then your first target down here is going to be the naked VPOC and the range high from Friday at 77 and 76.75. And then the first target inside is at 75.50. with 73.50 as a naked VPOC. Then your 71. Again, this triple distribution down here. 71 with a little bit of support here just below at 70. And then below that, the 66.75 with 62.25, and then the key level and key line in the sand for 59. And then below that, you have your year open at 55, CLVN at 53, FOMC at 51 and 49, and then all those other lower numbers, 45, the 40 to 39 area, the 30.25, 26. Should be 26.75, right? 26.75, and then 24.75, and that 19 and 11 still down there. So those are the levels I'm looking at. How I'm going to trade it is I'm going to be trading off of this 82.25. Anything below 82.25, I'm looking short, with possible a responsive buying stepping in here at 79, but think this might be a weak low down here with continuation down into this triple distribution, taking out 77, getting back inside of Friday's range and testing some of the levels on Friday, and this triple distribution between 75, 50, 71, and 66.75. If we hold the 82.25 and looking for continuation to test that range low, and if we can get inside of yesterday, a move up into the 89. 89.50 is going to be the other key area for me today. If we can get above 89.50, I'm going to get aggressively long into that 93.50 and 97 and 98 area and get back into doing some repair in this auction. You can see how toothy this trend day was. So I think you could get a pretty fast move up back through yesterday's value area into the 97, 98. But we have to get back above that 89.50. Anything below 89.50, I'm looking for a very neutral day with a lot of rotations. It's going to be I think going to be somewhat of a difficult day with a lot of large rotations in this this low volume area. Whoops, not that one. This one, this low volume area here. But if we break that 79, 75, don't even think about it. Just get short into 77 and 75.50 because this is a very blunt area, undetermined value, triple distribution, whatever you want to call it. I think we come back down here and we test some of the, we'll probably even test possibly all three of these levels. What was Friday's low? Friday's low was all the way down to that 62. 62.25, I think it was, and that where we picked up buyers the last time. And then all bets are off if we break 59. 59 could bring us a much bigger retrace coming into the mid part of this month, and possibly set up for a bearish month this month. Let's take a look at gold. I missed the trade yesterday. We talked about the CLVN. It was yesterday at 1102.40. And I'm saying, once they broke out of the symmetrical triangle and tested this 1102.40, they're likely to go up and test. The target was the 1107.80. We got to a high yesterday at 1108.50. Since then, they've come back and tested this 95 level, picked up buyers, rotated back up through. The CLVN shifted to 1170, and we're currently finding value and balance here around the 1107. So now that we've tested, we've broken out of this this balance area, you want to watch this 1170 level. You've got the 1101.40 is the value area high of this balance area. If we come back down here and hold this level, look for rotation back up again to test this 1107.80, but continuation to test the 1112.70, and then if we break above the 1112.70, look for them to move up and test the high of the day so far. But again, your two key levels is going to be your 1270 and your 1100 level, and I would not try to take a trade unless we get a very good setup between there. If we get below the 1100, then look for them to come down into this 95 and this 91, and probably even continue lower. I think the key to gold right now is, can it stay in the 1100s? If it can't stay in the 1100s, then I think we're going to come down and test some lower areas down in the 1000s. But we found some decent buyers down here, and they've broken to the upside. We were looking at that symmetrical triangle and which way it would break. It broke to the upside. So my hypothesis on gold is that we're going to grind our way back up into the 1100s, with the major target being up here where we fell out of balance. Up here at 1154.70. So I'll be looking to, if we hold in the next day or so in the 1100s, I'll be looking to build a swing position in gold for that move up into the 1154 and possibly continuation into the 76, and hopefully a move back into this 1200. The 1240 is the most traded price going all the way back to 2008 in gold. And if we do roll over in the indices, I'm looking for gold to come up and test this level again. Therefore, if we hold the 1100s, I want to build a swing position and then hold strong in gold for a big move. If I can get long somewhere in the 1112.70 and hold and keep a contract running all the way into 1200, that's a huge trade, and it'll be a really good one. So hopefully we'll find a good spot to get in. Hopefully find a FUBAR Mr. Sneaky. Again, I know I emphasized this, but I'm going to emphasize it again. My favorite gold setup. Just had one this morning again. Come on. Oops. I can't move things anymore. Why is it not? Oh, there it is. This is a FUBAR. Huge spike in volume. Selling wick. Not quite as big as the body, but strong enough. Then you have the inside bar. You create the tech gap. What happens? Rotates down, and this would have been your entry bar. So your high here is 1114.30, low is 1111.17. Let's say 1112 area. You got short. You got to move all the way down, and so far the low is 1104.80. So I'm sorry, 1104. Anyway, in around 1104. So that's a $700 move in one contract. And you can trade gold and do it even on a one lot. You just have to pick your setups, and this is be one setup that I would recommend to anybody that wants to dip their toe in gold. Anyway, that's going to complete the pre-market trade plan setup for Tuesday, August 11th. As always, trade well, trade safe, and we'll catch you on the flip side.